freedom isn't the result of wealth. It's the foundation. Welcome to Wealth Independence, where freedom leads and real wealth follows through battle-tested strategies, hard-won lessons, and real-world experience. You'll discover how to accelerate your path to true financial independence. And now your hosts, Dustin Bailey and Adam Penn.
All right, welcome back to the Wealth Independence Podcast, where freedom leads and real wealth follows. I'm Dustin Bailey, here with Adam Penn. Adam, how are you?
Hey, today? Dustin. Happy to be here. We've got an awesome guest that I'm excited to interview today.
Yeah, for sure. No, I've been excited to bring him on. I'll let you tee it up. I'm very excited about this episode.
Yeah, good friend Aram. He lives in the Bay Area, not too far from me. Met him through some conferences through another friend of ours. I'm sure we'll have on the podcast sometime, Seth Bakam, who started as an electrical engineer and then bought a bunch of units. And then, he introduced me to Aram at a conference, and Aram's got a similar background. Aram's got an electrical engineering degree, started kind of doing some business admin type stuff and running some larger businesses from being an electrical engineer. And then he got into development, worked on he's got a fund right now where he's raising money to do modular home building in Austin, which is really exciting. But yeah, we're super excited to interview him today, learn more about his background, learn a little bit more about what freedom means to him, and overall just see what nuggets of knowledge we can gain.
All right. Well, let's dive in. All right. Well, Aram, welcome to the show. We're super happy to have you here.
Yeah. Thanks, guys. Thanks for having me.
Yeah. Thanks so much. You've got a pretty unique background, and we've got some questions. I think your background will resonate a lot with our listeners, and kind of it resonates with mine and Adam's background, kind of coming from a tech space, then focusing on real estate as well. But you're also doing some things that are different from the things that we do. So excited to dive in.
Yeah. Thank you again. Yeah. Thanks for having me.
I'll kind of kick it off, but Aram, so, when I first met you, you were working on a development deal in Louisiana building townhomes, right?
Yeah, we actually purchased those townhomes. So we from the developer directly, and he had completed them, and it was leased up. It was really a functioning community. But just to back up a bit, those townhomes specifically were built to rent, and I think what really was exciting for us was that build to rent market. And we feel like we're fairly early to that. If you like, I can just give a little background on how I got here, maybe, because I think it really resonates. So it's great that you said we all have tech backgrounds. And I think, I don't know that I ever wanted to be an engineer, but then I became one, right? And I went to Berkeley, studied electrical engineering, and kind of followed in my father's footsteps, really, because I didn't know what else to do, and I was good at math. So there I go. I'm an engineer. In my family, if you weren't a doctor or an engineer, you were pretty much out of the house, right? So, went the engineering route because I didn't like the sight of blood. So I get out of school, and I really find myself going, well, what do I like to do? What I really like to do was kind of run businesses. So I got into the business of engineering services pretty quickly in the semiconductor space, and I was at a small company, and I had a lot of freedom to kind of build that business out, help them build the business out. So at 23 years old, I'm sitting there making kind of nice and big decisions and being part of something. And so that felt really good. And we built that business up and sold that business, and kind of got to do that a couple of different times over my career, and slowly had more and more responsibility working for bigger and bigger companies. But I got a sense of, it was great analytical training. One, my engineering training, if I say anything, it teaches you how to be an analytical thinker. So I felt like once I started looking at P&Ls and all that and running businesses, I'm like, well, this is easy relative to hard engineering. So, it's just arithmetic. Yeah, we can figure this out. So it was really good analytical training for me. Being really early in kind of, I was doing go-to-market stuff before I knew it was called go-to-market, right? Those kinds of things. So learning that and kind of getting almost like an MBA on the job was really, really fun for me. So I spent a lot of years in that, and I still really enjoy it. I think there's, it's a part of my life that I think is part of the rich tapestry that is my life. But anyway, through all of that experience, as you're getting a little older and these companies are getting sold and things are happening, you're making some money. And I thought, well, geez, I'd like to, and as you're making money, I live in California. So what happens is you pay a lot in taxes. And so I'm looking at that going, gosh, there must be other ways to not pay taxes. So I started learning about private placements and the alternative quote unquote investing space. I would just call it the investing space, but really the private investing space outside of the stock market, and started to get really into that. And simultaneously, my friend since childhood, Jeff Block, we went to the same elementary school together. We also both went to Berkeley. So like we both have this kinship. Our mom served on PTA together. So he and I were both on this very similar journey where we're kind of nominally the same age, both going through tech and both kind of creating some initial wealth through that and saying, now we want to amplify that through these other means. And so we both got into investing, and we were very aggressive passive investors initially. So as limited partners in deals, we would invest. But yes, we were going to we're going to workshops, and we're learning stuff. We're traveling to the sites, and we're meeting deal sponsors because we really wanted to voraciously kind of understand this. And then being the data nerds we were building our own models and calling sponsors and saying, hey, I think your numbers are wrong, or hey, have you considered this? So probably a pretty annoying investor from a sponsor standpoint, but it really got us to understand the investment landscape, what was available, and what we liked and didn't like about the investor experience, which is also, I think, a pretty important part of our DNA. So fast forward, we're going through all of this, and we're telling friends and family about it at Thanksgiving and whatnot, and they're like, "Oh, that sounds pretty cool." I said, "Yeah, you should do that too, right?" But most people don't want to put in the time, the energy, or the work. So they're like, "Well, can you just do it for me? How about I give you some money and you invest it for us?" And we said, "Well, I think the way it works is I'd have to be a broker, and I'm not, so I can't do that." And they said, "Well, how would that work then?" I said, "Well, we'd have to have our own deals." And they said, "Oh, well, then why don't you do that?" And that was a bit of the aha moment for us, where we said, "Okay, well, we should start putting our own deals together." So now we're at this place where we're like, well, how do we do that? What does that look like? And as we looked around, we decided, well, we should do the things that we've been investing in because, gosh, we know that stuff. Well, what we had historically been investing in large part, were apartment deals, multifamily deals, and B and C class, value add, kind of stuff. This is, you go back, 8-10 years. That's kind of what you saw a lot of that stuff. And it was doing really well. So we said, we should do that. But as we looked at that, and we took a good look at ourselves, we said, look, this is a pretty crowded space. Even then, it was a pretty crowded space. Now it's berserk. But back then, it was a pretty crowded space. Already there was, a bunch of gurus selling classes on it and stuff like that. So I said, well, geez, are we really going to be the best? Are we going to have the attention of the best broker in Dallas or Houston or Orlando? And are we going to be first in line to get those secret calls in the middle of the night saying, hey, this one's on the market, you got to jump in? No, we're probably going to be last in line, working our way up. So chances are we're not going to be able to create value for our investors, right? We're just going to be a deal shop, sifting through deals. And I hear people saying, oh, I underwrite 100 deals a week or something. I'm like, gosh, I don't even want to do that. That's not who I am. So we set out to say, all right, how can we create value? What are the things that are happening in the mega trends of the world that need fixing, right? And housing clearly is one, and that's where apartments fit in. But long around that time, we got wind of this idea of build to rent, and in the sense of building homes for the purpose of rental. We got pretty excited about it. We said, that's an interesting model. And this is now 6 years ago or so, 7 years ago, maybe we started thinking about this. And not as many people were doing it then. But we also weren't developers, so we didn't know how to build these things. So we said, we got to find some developers. So we started looking around, talking to lenders, talking to developers. Most developers wanted to sell us something. Sure, I'll build you that, and then you can buy it. And we said, no, we want you to be our partner, and we'll work through the whole arc of ownership together, and it could be great. And we wound up finally connecting with a gentleman who was awesome at this in Louisiana. We're now at the Louisiana part of the story. And we immediately kind of fell in love with, frankly, what he was building and his team. They had built this cottage style, beautiful, cute little bungalows, and they had made this little community that I wanted to live in. I'm like, this is cool. Like, that's great. I could stay there. I could live there. My kids could live there. This is a cool thing. And his team just had high integrity. And his vision, he was a luxury home builder that had taken all those luxury sensibilities and design elements and just kind of right-sized them to this cottage-style model. So he did a fabulous job of kind of capturing that kind of magic and making the living experience killer. And we said, well, this is the guy, right? And he also believed in his model and said, yeah, like I want to stay in the whole arc of ownership. Now, he had some investors that had this original community of 42 homes, which I would say is his prototype community, but we loved it because it really wasn't to the right size scale. We still own that community today. I said, look, we'll buy this from you, because his investors just wanted to move on. And I said, but what I really care about is not buying this community, but working with you longer term. So we bought the community. This is now 5 years ago. 5 years ago, we finally closed the deal, I think. We've owned it since. We love it. If our investors will let us, I'll hold it forever, because I think it's just, it's a neat little cash generating machine, but also it's created equity, and it's just a neat place to be. And I think Lafayette, Louisiana, where it's located, is a neat town. So anyway, that was our first deal. We raised money through friends and family. We didn't really know what we were doing. We we raised $2.5 million from friends and family, and put our PPM was a deck that we emailed to people, right? And raised the money pretty quick and got it done, and felt good about that. And just kind of scaled it from there. We've since gone on to have 2 other build to rent communities in Houston that are ground up with the same developer. And I can talk more about those, but that gets us to the Louisiana part of the story. So Adam.
Yeah, which is where I met you, right? I met you through a common friend, Sep, and he's kind of been a similar path, right? He was an EE, right? I think Sep was an electrical engineer, and he started building. He's like, this doesn't make any sense. Why am I working these long hours and have no income? And then he started buying a duplex, and he's like, well, this is a lot of work, and now he's grown it to a few hundred units and all self-managed. So how does it, kind of like you said, you like doing these deals, you were good at bringing the money together. You're not going to be the best apartment building investor in the space that every broker is going to call you. Where have you kind of found your niche and been able to, bring value, one, to your investors, and 2, to yourself in building this business, like you said, you enjoy doing of building businesses? Yeah,
that's a great point. So I think, again, I came to this a little later, maybe in life, right? So I'm syndicating in my 40s when we start this. And at that point, I'd had some work and business and life experience. And so what we kind of said at the time was, like, who are we? It's the first step is really a soul searching exercise of what do we want to do in the space and how do we actually bring value? And as I said earlier about, I'm not going to be the deal finder guy necessarily. I have to create opportunities, right? Because sifting through deals and being number one in line isn't it for us. So what are we good at? I think we're good at understanding the macro objectives and how these deals fit into the context of the larger macro world, right? Like, do these things align? Like, I'm not married to a specific asset class. I'm first of all an investor at heart, right? So I don't look at a house and go, this house has great bones. Like, I don't know what that means, right? There are people that really love that. I see flippers that really understand. They can look at a house and see it. There's developers that can look at a piece of land and imagine what its use case is going to be. I don't have that eye, but I can certainly take a business plan and flesh it out. I can certainly, whether it's legal, administrative, all that stuff, all that business, running a business stuff, I get. So we bring a lot of value, I think, to those kinds of situations. And then we're also just pretty good at communicating those business plans and raising money and communicating with our investors. We're investors ourselves, so we know what we want to see. So kind of putting that together and synthesizing something which is simple. I mean, if you can't distill the business plan to a simple couple of sentences about what you're doing, you either don't know your plan, or you haven't really, or you don't know it enough, right?
We had an episode recently where we're like, if the person pitching you the deal, if their big talking point is that their underwriting is so advanced that it can't fail, it's not a good deal, right? Like, if that's the pitch point, you're like, it just needs to make sense as a deal. Like, these things need to make sense on a napkin.
Yeah, and the other thing is it has to line up, I think, at the high level with your sensibilities about life. So, for example, if I believe that bowling alleys are dead and all bowling alleys are going away and it's all going to be replaced by video terminals and whatever, and somebody tells me they've got this great bowling alley pro forma and we're going to build 3 bowling alleys in Dubuque, I'm like, I don't like bowling, and I don't understand why people do it. So I don't care what the returns are. Fundamentally, I'm dissociated from your idea. So I think it first starts with, who are the people doing this? Do they have any experience doing this? Then what's their business plan? Does the business plan hold water? Does it make sense against the macro backdrop? Because the reality is, if the macro backdrop is solid, then you can afford to be a little wrong with your underwriting. I want to be, because you will be wrong with your underwriting. Every pro forma is wrong, and you're not going to nail it exactly. It's going to be a little under, a little over, whatever you hope, a lot over. But at the end of the day, if the environment, the macro environment that business plan is in, is supportive of the business plan, you can afford to have some mulligans in it. So that's what I'm always looking for, is how is it de-risked? Because every investment has risk. So it's always about, what have you done to de-risk this, right? Well, I've de-risked it because we're in an environment that's growing, or we're in a market that's doing this, or this asset is doing that. That takes much of the risk out, because you can't fight that tide with, we've got some unique thing that goes totally against the grain. Well, maybe, but good luck. Not everybody can be, I don't know. It's not for me.
It seems like a lot of what you focused on is, one, making sure that it's an industry you want to be in, but two, that you're aligning with macro trends such that you can bring that value to your investor and not trying to do something super obscure.
Yeah. Well, the macro trends are the tide, right? So it's this idea of, you don't fight the tide, because the tide is the tide, right? You surf the tide. So surfing the tide is a question of, well, can I build the appropriate surfboard for the tide? Well, if I can, then maybe we've got a deal. If I can't, then that's fine. It's not for me. And then knowing when and where you can and can't participate. Sometimes I don't have market access because I don't know enough people or things in that market to meaningfully do something. Sometimes it's, asset access. I don't have enough current access to that asset class. For example, right now, I think there's a problem with water in the world, right? The world's going to need water. Now, I haven't found a way personally to set up an investment for our investors, but someday, if I do, and I have the right set of partners and resources, a play in water could be quite interesting,
And we've talked a little bit about agriculture, right? Especially where we are. If you could find a good producing farm, right, there's never not going to be a need for food, right? That's just going to continue to grow. So if you find the base level things that people need, and then build investments and businesses on top of those, I think that's what can lead to overarching success, even like you said, when some things go wrong.
Yeah. And then I think it's always about, within that niche and within that business plan, that you are really crystal clear about your differentiated value. And it doesn't have to be like, the next Amazon. It doesn't have to be differentiated. I mean, people think about differentiation like tectonic movements, but it just has to be incrementally differentiated, such that you can have that some advantage, early mover, or a better way to do something, or something that's just differentiated that gives you an edge. If you can figure that out, then you can do fine. For some reason, new burger places and new pizza places are always popping up. The world doesn't actually need more burger places per se, but there's somebody that comes in with a differentiated knife edge, and they cut through the others and they kill it. And you're like, wow, how did they do that? Well, they did something unique, right? They did something special. So, but people will eat burgers for a while, I think.
Yeah, I agree. Dustin, anything that you want to touch on?
No, this has been great, Aram. Honestly, like I've been taking notes here as you've been talking. You've dropped a lot of like really good things. I mean, I think that what you said about every pro forma is wrong. I think that's a good reminder, right? Like everyone gets hung up in, having prior to investing, are all the details right? How confident are we in this? And it's like, well, we're pretty confident, but if you like go into any investment knowing and kind of accepting, look, we know there's going to be parts of this that are going to be wrong because we can't control it all. I think that that sets some proper expectations. But then if you're placing the reliance on, we know some things here we're not going to get right. Maybe we're going to get some things right that we didn't expect to get right. So those will balance out. But if the macro environment, kind of the overarching thesis behind this play is correct, then I like you're like, yeah, we're going to get some mulligans here. I think that's great. Because again, to Adam's point, we were talking the other day, and I see this from other people that are, they're like, oh, well, you should invest with us. Our secret sauce is our very complicated underwriting methodology, and this ridiculously complicated spreadsheet we have. And it's like, well, that's not No, like that's not where the secret sauce is. And so I think a lot of people, and especially like those of us that are more engineering minded, can naturally get caught up in that, right? Because we want to look at the numbers. We want to make sure that all of those little pieces are perfect.
Yeah. So I mean, so say something about that. So the analytical modeling is important. I think the challenge, particularly in real estate, is it's a little weird this way, is that we rely on the deal model to describe the operation, and it doesn't, right? It's just a business model. What actually is the operation is the operating team that then has to execute. So like it's just a business plan, right? And then it's like, well, how are you going to execute it? Who's going to do what? Who's sitting in what chair? And I think we lose sight of that. So, or I don't know, the investing world seems to lose sight of that. There's no way, if you were to start a company, because that's what these are, they're companies that are doing something. You'd say, okay, well, who's the CEO of the company? Who's the management team of the company? What's their execution plan? What's the timeline? Instead, we say, well, look at the business plan. They sell 90 widgets. You wouldn't do that. You wouldn't say that we're going to build widgets at the widget company and go, oh, look, they have this nice Excel sheet. And if the CEO of that company said, I built a more advanced Excel spreadsheet to calculate the price of widgets, you'd be like, yeah, but you have to make them and produce. So we don't question the operational stuff maybe as much as we should. You say, well, what's the exit? How does it look like? What's the ownership look like? How do you manage through difficulties? If this happens, then what? So these are the de-risking elements of the operational cycle that I think get taken for granted or just assume that they're going to be fine. And they're not. It's a lot to take on. So you just have to be sure that the folks you're going to be investing with, like, have thought through that, and that you feel like they've got enough, I don't know, horsepower, ingenuity, self-reliance, whatever you want to call it, that they're the right people to do this, right? So that's a part of it as well.
Yeah, no, that's awesome. I guess to kind of like, I think we've talked some about deals, and Adam, I don't know if you've got more questions on specific stuff, but I'm also kind of curious on you talked a little bit about finding more of a passion on the business side of things and not necessarily with the engineering, but like thinking about the space you've been in, working in tech in the semiconductor space, like how have some of the principles and things from that realm, how does that apply over into real estate, the deals you do, your own investing, things like that?
Yeah, I think at the end of the day, everything's a business, and everything has customers, and everything has some value-added differentiation they have to bring to their customers. So, I spent the bulk of my engineering services world time serving customers that were in technology, and people think about, well, there's these big companies you work for, or you sell to, and I'm like, yeah, but you're selling to people, right? And so those people that are the individual users of these services have to understand what it means to them. So I don't think it's any different. I think that basic, I think if you just distill it to its simplicity, like what are you offering, and who are you offering it to, and why should they pick you over the next available thing? And I think we talk about real estate in a weird way, because we talk about the buildings a lot. We don't I'm settling on real estate. There's a lot of different investments, but in real estate, there's this tendency to say, oh, look at this great building, look at what the rents are. And I go, well, who's the customer? Like, what does the customer avatar look like? I asked a guy one time who was pitching me some apartment deal. He's like, look at these great numbers. And I said, so why your apartment? He's like, what do you mean? I'm like, why your apartment? He didn't really have an answer. And I said, he's like, what do you mean? And I said, well, I'm the renter, the customer, right? We call them tenants, which is an obfuscation, like calling people troops, right? But it's you sort of think about, these are people that are going to rent your place. So I'm walking down apartment row, and there's one apartment complex here and one there. Why yours? Because I remember renting an apartment when I first rented apartments. Like I liked that one had a cooler. It was safer. It was on the right corner. There was girls closer. Whatever it was, like there was a reason to be in that complex. So. Those are the kind of things you have to think through. So what's the differentiation for the end customer? Because if the end customer isn't happy, you don't have a business, right? So, and I think that just resonates throughout. And then everything else, there's levels of detail and nuance that are particular to a specific business. But if you can't roll this up to at a high level, see the forest through the trees, you're gonna have a problem, right? So I think that appreciation is after some years of being in the weeds and being at a macro level and kind of, you got to be able to go back and forth, right? But you should always be kind of like, when you're working on something that's detail oriented, that's fine. Fix that problem or get that solution for that problem. But then you always have to kind of look at things in context. Nothing lives in isolation. It's another reason why, like, I love doing lots of different things in my life, because each one adds a layer of understanding that informs the other, right? Like my engineering training, my analytical training, my finance understanding, those things inform my investing. My investing informs the other, right? I'm much more effective having been an octopus, doing a lot of different things than I would. I go to some real estate events or other kind of investor events, and sometimes it's an echo chamber, right? Where everybody's just like talking about something that's they're all agreeing. And I'm like, okay, well, this is not great for any of us to learn anything. We can all feel good about ourselves that we're in this tribe together, so to speak. But no, like, go challenge yourself. Go talk to people that don't believe that what you're doing is right. I can give you guys a little more, just to kind of fast forward a little bit. So then we did that Louisiana project, and just in continuing with development, we really liked that. And so we took that show on the road, so to speak, and that same developer, we built out 2 additional projects in Houston. One is 129 units that we are just in the final stages of lease up. We'll probably sell that, but that went from dirt to 129 units with a pool and all this great stuff in near the Woodlands area in Houston. We're probably going to start listing that one pretty soon. And maybe Q1-ish, hopefully have a sale or so. That's what it looks like. So that was an interesting time. We went through all of COVID during building and all the lumber spikes and all that stuff. So you talk about getting curveballs handed to you. When lumber prices go up 3x, what do you do? So we really got through all of that. And I think it was the strength of not only our builder, but ourselves. Frankly, some of the balance sheets we all brought to the table helped, right? Like, there were things that we were able to do to manage our way through that in the end, our investors are going to do very well, despite all those challenges. I think if we didn't have as strong a partnership, it might have come apart, right? And then we did another one that's about a year or so behind it, 146 units, just about 10 miles down the road, that's just been built up. They're beautiful. They're gorgeous. And like, I look at those and I go, I can't believe I was part of this. Like, this was a pile of dirt and now it's like a thing. So now I didn't do the hammer swinging per se, but like, but it's something to be kind of proud of, right? I'll be there for some years. I can drive by with my kids and go, Daddy was involved with that. It's kind of cool. So, and then, here's another interesting thing I'll just kind of leave you with on that note is that, those are all built to rent, right? We tried like the devil to do the 4th one, right? Couldn't get the underwriting right. Couldn't get the numbers right because land costs started to go up. Financing realities changed, right? So sometimes what works in one season doesn't always work. So investors need to learn to pivot, right? And I think to some extent, syndicators and deal sponsors and stuff, they either should put their pencils down and say, we're just not going to do anything. Because we're like, if we are only committed to one certain asset class, maybe this isn't the season for that asset class. Maybe we just don't do anything for this next year or two because there isn't anything worth doing, right? But sometimes I see people that are like constantly trying to roll the ball no matter how steep the hill is. And that's always dangerous too. And that actually got some people, I think, in trouble this last couple of years in certain spaces. And we'll just leave it at that. But I think it's important to be able to pivot. So we pivoted away from that build to rent because we can't make the numbers work. Maybe we will again someday, but right now we can't. And so what we've done most recently is something that's kind of pivoting, or I guess transitioning to kind of even another mega trend that we see, which is in the modular construction space. So modular's been around a while. It's when I grew up with it, actually I'd say up until even more recent times, modular was associated with like ugly. It was like, oh, that's kind of ugly. Like, what do you mean double wide? I'm not living in that. Like, that's kind of what I thought,
That's the general perception people have.
Yeah, for sure. That's the general perception I had. Well, the truth is modular's come a long way. So prefabricated modular, really all it means is you're building out in a factory setting as opposed to at the site. And there's massive efficiencies and massive time saving doing it that way. So we started to warm up to this idea, and we had a great partner and friend who we've known for a long time who was doing this successfully. And we coupled that with in Austin now, where they've changed the zoning laws, so it allows you to build three to a site. So now you can do these lot splits, and it's very efficient. And I won't get into all the details, but suffice it to say, it massively changes the economics. So great, we've got a tiger by the tail, and we're off and building. So that's our latest fund. We put that in a fund structure. It's our first fund structure because it's not, every deal is kind of a smaller.
Yeah.
4 homes here.
One lot with 3 buildings on it is much smaller than doing 120 unit development.
Yeah. So we're not doing, one. Anyway, so we've got the fund, and then each project kind of fits into the fund. So it's been a good model, raising money. We've got active stuff in the pipeline, and we've got homes that are being built. Some will start to sell soon. It's pretty cool. So we love it. And again, I'll say this, I'll tell every investor that comes in, they go, well, how long is the fund going to be open for? And I say until the economics no longer work. Now, one of 2 things will happen, guys. Mark my words. 1, a ton of builders will crowd the space, and the margins will get tighter. And we'll say, oh well, maybe we had a nice day in the sun, we're done. Or the city of Austin itself will say, well, that was a fun experiment. I don't think we want to do any more of those permits. And that might come a couple of years, whatever, down the road. But that day will come, right? And one of those 2 or both of those vectors will crash into each other, and we'll fold up the tent, right? And do something else. So windows of opportunity open, and they also close, or they also become less of an opportunity, or they become more, saturated. So I think it's just important to, generally speaking, keep your eye open, be looking for those, look for how you can play a role in that and bring a really differentiated thing for your investors or yourself, right? Starting with yourself, right? We're our investors in all of our own deals. So we generally like what we're doing. We always like what we're doing. So that's my big takeaway.
That's awesome. Yeah, it seems like once again, you're able to kind of leverage on some of those larger trends that you see coming and capitalize and build structures around those such that you can provide investments on it.
Yeah, that's the hope. Yeah, and it can't always do it, but when we can, we try to.
Awesome. Dustin, anything you want to close with?
I guess our last question we'd like to ask our guests is kind of, we're the Wealth Independence podcast, and like the sort of this idea of freedom and independence. And that means something different to everybody. And so, what do the words freedom and independence mean to you, and kind of how do you manifest those in your life?
It's a great question. So I think my dad used to tell me something, which was that he said, life's like a tripod, and you have to have all these things in balance or the tripod tips over. One is financial. Without having some money, life sucks. It's just hard to live a life, right? The second is relationships, like personal, friendships, romantic relationships. You got to have that aspect fulfilled, or it's hard to be fulfilled. And then the third is self-actualization, like passion, purpose, right? So I think part of what gets people in an unhealthy state is when those things aren't in balance. So for me, freedom is the ability to choose how to go about those things, right? So I think there's this, well, let me back up a second. I think people get caught up in this idea of financial freedom. Even this idea of retirement is kind of this bizarre misnomer. I'd start I think having enough money, wealth, whatever accumulated to give you degrees of freedom is great, right? And that should be a goal for people. And I think trying to find out how you get there, I think it's a little bit, you got to be practical too. Like sometimes you can work on that, while you're doing other things. So let me back up to the retirement. I'm getting a little off track. So from a retirement standpoint, the misnomer with retirement is that it's this finish line, that somehow you're done. I've seen so many people, my father included, if I'm being honest, who retired probably too early and didn't have something to do after that. And I think he has dementia now, and I would say that part of it is his probably part of his decay or premature mental decline was from not having a passion purpose anymore, right? In the same kind of way. So I hope I'm doing these kind of deals until I die. This is fun. For me, freedom is being able to do the things I want to do, right? I want to work really hard for a really long period of time. I think probably Warren Buffett does too, because why is that guy working, right? It doesn't make sense. It's because his passion is doing this stuff. So I think if you find the things that you really like, that get you up in the morning, do those. Now, if you also have to backstop that with some other work because you still need to work or create income, you can do that too. It's not a horrible thing to like. I mean, if you're 22 years old, you just got out of school, and someone's like, you need to be free of corporate America. Well, okay, that might be a nice goal, but maybe it's worthwhile taking a job in corporate America and learning something. I learned something from being part of corporate America. Go learn a few things, right? There's nothing wrong with it. Corporate America is where most people work. If those are going to be the investors in your deals or something like that in the future, you better know what makes it tick anyway, right? So there's nothing wrong with having a balance of things in your life. Work a job, but then also work on yourself. If your goal is to ultimately own your own business, what do you want to do? Go surround yourself with the people that are, that are in that space today, and learn from them. Partner with them, do the things you want to do. And we, I've never made money in my life alone, right? So freedom sounds like it's this thing where you've jettisoned from the crowd, but freedom is just kind of doing things in your own way, on your own terms, and having enough degrees of freedom in your life to feel not trapped or stressed out from like some day-to-day thing you've got to do. I would honestly say that the minute you start doing something for yourself, like even if you had a corporate job that you hated and it was paying the bills, but you had some passion purpose that was keeping you vital, that would actually be that was not so bad. I think the people that are miserable are the people that feel stuck in a job but aren't doing anything about getting out of it. The act of doing something about getting out of it, whatever that is, right, to create some new passion in their life, is liberating. It's freeing, right? Because you always have customers. You always have. There's no being free. I mean, the billion Warren Buffett. I mean, I bring him up again. Like, he's got customers. He's got people he's responsible to. Like, he's financially free, but you've always got like people you're working with or for or whatever. So, and that's not to say that's a bad thing. That can be a fun journey. So I think it's about thinking what freedom means to you, and like, how do I want to find happiness? Because really it's about happiness more than it is freedom.
That's awesome.
Yeah.
No, so many nuggets in that. That's fantastic. I love the tripod analogy. I think that explains a lot of things. Like, I haven't thought of it in that way before, but when you start thinking about people who get out of balance or people who I know and who have struggled, you can like, I can like that analogy holds, right? I know that one leg has been off, so that's fantastic.
Yeah, my dad was a smart guy. And I say was because, like I said, I think he retired a little early, and it devastated probably some of his psyche and mental state. So I don't want to repeat that. That's part of the lesson. Yeah. But the other is, you got to have something to get you up in the morning. You hear those stories about people that retire and die shortly thereafter.
Yep.
There's a real reason behind that. Yep. Passion and like a little bit of that, the stress that brings, that's the juice, man. That's the gasoline. That's the fire in the belly stuff. It's fun.
For sure. Well, Aram, we appreciate the time today. If folks want to connect with you or follow you along or have a conversation, what's the best way for them to do that?
Yeah, I will give you guys my email. You can share that with those listeners, and there's a QR code we can give folks if they want to book a call. There's a calendar kind of way to do that. But love to hear from people. Love to hear about their journeys. Everybody's unique. Everybody's got their own thing. But yeah, love to connect with people and share stories. And if people are interested in what we're doing from a deal perspective, they can just follow us and perhaps invest with us. So awesome. Thanks for your time, guys. Really appreciate you thinking of me.
Yeah, thanks, Aram.
Thank you for being here.
Yeah, we'll make sure those links make it into the release notes and everyone has access to it. But yeah, thanks again. We appreciate it.
Thank you guys, and Happy New Year.
All right. Well, that was awesome. Honestly, I was legitimately taking notes like the whole time. He dropped a whole bunch of knowledge bombs. That's such an overused word, but honestly, there were so many nuggets there. I mentioned it during the interview, but just this whole idea of acknowledging from the outset that your pro forma is going to be wrong. I think that's super important, not only for folks on our side, but for passive investors that are evaluating deals, right? Like to go into it knowing like, yes, this is the plan, but well, obviously there's going to be things come along that we don't know about. And I also think just that importance of like understanding the macro environment. I mean, that's again from a passive investor standpoint, that kind of de-risks the investment and the sponsor team somewhat. Obviously he talked about the importance of pivoting and especially doing this development project through COVID. So the sponsor team's important, but acknowledging that things aren't going to go right, that there's going to be things you miss. But as long as you do it in the right backdrop, you got a good team, you got a good macro background to do things against, it increases the chance of success. Yeah, so that was an awesome interview. There's so much there that I'm going to be, honestly, I will go back and listen to a couple of times and take some more notes. I thought it was great. I don't know, Adam, anything in particular that stood out to you?
I think really just the macro trends, right? I mean, we've invested in oil and gas, we've invested in real estate. I think, honestly, we've got some short-term rental investments that probably were on the tail end of the trend, right? They're solid buildings. We're producing cash flow. They're going to be great buildings in the long term, but I think we caught the tail end of that trend. And so I think just being super mindful of that and really going back to the pro forma is the projection at the time. You didn't know, if you bought an apartment building in December 2019, you didn't know what was coming around the corner, right? You didn't know there was going to be a pandemic that was going to change interest rates and the government was going to do all its craziness. And it was unknown. So betting on the macro trends more than this specific deal, like his bowling alley example of, if you just have this super good looking pro forma for a bowling alley, I don't know if that's the best investment. So you got to believe in what you're doing, and that's kind of why we do the oil and gas, right? We think that over on the overall long arching time frame of energy, oil is going to be a great investment, and that's also why we've pivoted a little bit to the credit fund, is because we think that there's not a whole lot of equity deals out there that make sense right now, right? Oil and gas does from the tax benefit and the resource standpoint, and then we can't find a multifamily building. Doesn't mean we're not looking and underwriting deals every day, but if we don't have one, then being on the debt side is another opportunity for us to continue to build wealth.
No, that's awesome. Well, I'm glad we were able to have him on. Hope it was a benefit to everyone. Everybody could take something away from that. Definitely connect with Aram. He's on LinkedIn, and then his company, I don't think we mentioned the name, but it's Lecreme Partners, LECREME.
And we'll have a link in the show notes to all that, release notes.
For sure. But I think that's all we got for this episode. Thanks so much for joining us, everyone. We'll see you next time.
Thanks for joining us on Wealth Independence. This show is for informational purposes only and is not financial, investment, legal, or tax advice, and does not constitute an offer to buy or sell securities. All investments carry risk, and investors should always conduct thorough due diligence and consult with qualified professionals before investing. Until next time, remember, freedom leads and real wealth follows.